What is up, guys? Welcome back to the channel. Welcome back to bitcoineasy.io. Second video here back since my 3-week break over the summer. And yeah, we got a lot of interesting stuff to cover. We're going back into the data, of course, the returns that we looked at yesterday for September. If you haven't checked that out, make sure to do so to get an idea of how Bitcoin usually performs in September. Of course, we have the producer price index PPI taking place on Wednesday. Then on Thursday, we have the consumer price index CPI numbers coming out. And also on the same day, we have the meeting for the European Central Bank, which is basically the equivalent for an FOMC meeting where the interest rates get decided. So really interesting stuff coming up. And guys, we get into the charts, of course. We're going to look at Bitcoin here on the weekly chart and also at some total market cap charts to get a better idea of where the entire crypto market is at and what potentially the targets here are for this cycle. So a lot to cover. As I said, I'm going to make sure to pack these videos full here with data and technical analysis over the next few days to catch up with everything we missed while I was on holiday. Fortunately, the price stayed within the exact same range over these weeks. But yeah, guys, make sure to stick around all the way until the end of the video. There's a lot of interesting stuff that I'm going to be covering in the charts as well as the data. Without any further ado, let's dive in now. Okay, here we're kicking things off on the weekly chart for Bitcoin. And of course, we have a massive weekly close coming up here. We have reached a very strong area of interest here from a horizontal perspective where you can see that we have revisited the prior range highs here, specifically on a closing basis, right in the $108,500 range, a key level here, and something that we've seen here throughout the cycle multiple times, right? We can see we came back down to the highs here, but from a price action perspective, that is very different to what we saw before. I've seen people post about it that it looks very similar to what we saw here, for example. But if you look at the actual price action, it looks very different, right? Here we had a very long consolidation phase back in March 2024 till November, I think it was. But yeah, guys, here's the key thing. We came back down here to the previous highs here. Not only that we revisit that area, we also came back down to the 50 EMA here, or the 50-week SMA, sorry. And there we started suggesting that trend line here now, forming this parallel channel here that we're currently trading in. And then, of course, before that, in this uptrend here, we've done the same here. Back in August 2024, we came back down to revisit the previous highs. But the difference here is we printed a high, broke out, and immediately came back down here. And we have really no other support than the previous highs in that area. The bounces that we saw here previously, they always came from way stronger confluence, right? We saw the 50 SMA here down in this scenario as well. Then here in this case, then we started forming this trend line here. And now we're just coming down here to this key area. And really, the main support here, still being lowest, lays in the area of $98,000 here, where we can see the 23.6 on the Fibonacci retracement for the entire uptrend here, where we see the 50 SMA here, and then of course also a very strong horizontal level coming from this prior range here. So very, very strong support area if this now breaks down. We will see now in the smaller time frames that there's also, of course, a lot of strong support in the area above there. That's a potential scenario as well that we find a bounce there. But if we just go here by the weekly chart, and that is, of course, here massive support as far as the cluster goes here of the indicators that meet in that area. Keep that number in mind, by the way. 98,000 is a very, very interesting number that we will be looking at in tomorrow's video as well, where we find something really interesting on the CME chart as well. So here from this perspective now, this really a line in the sand now where we're sitting on, and ideally we want to engulf the previous candle here and get back into this range in $114,000 range. And then we would have a potential scenario here where Bitcoin continues up to test the previous highs here. And then if we see a weekly close above $119,500, then we can expect here another test of the 8-year resistance line. Of course, this is the line here connecting the red one, all the wicks since 2017. Here we can see 17, 2021, and now here recently a couple of touch points as well here in the current cycle. So that is of course still the key resistance. And then of course on a weekly closing basis, we want to stay above the prior week's closing low here, 108,350 roughly. If we start closing below there, then it becomes very likely that we get down here. So very, very strong area that needs to hold here. And this is, of course, the critical area to keep this bull market alive. As we know, every time we put in new all-time highs and then it ended up closing below the 50-week SMA, we always signaled that we're going down to our bear market lows. We've tracked that back historically here many times on the channel. So you can just actually pull up the 50-week SMA in the charts over on TradingView and check out how that played out. And then you will see that after printing new all-time highs, it really happened 100% of the time. Okay guys, so these are the key levels here now. To the downside, currently here, the weekly, we want to hold 108,320. To the upside here is the key line, 114,400 roughly. Then we in green territory here again to get another shot at the previous highs. And those will potentially be cracked, the overall all-time highs, if we start seeing weekly closes here above 114,225. And then here, of course, the overall high here is right in the $124,000 area. And then we could potentially see a move here towards the $125,000 to $126,000 area. And if we see closes above there, then of course here, especially if that drifts over into the monthly chart, then we broke a line that we have not managed to break in the last 8 years, and then we could see Bitcoin continue upwards to much higher price targets. Of course, we're still looking at the $135,000 range to the $150,000 range as potential cycle tops here. Talking about those targets, we can see here that of course above, to get to those targets, we would have to break the 8-year resistance here. And then of course that would lead us here to the resistance line of the tops in the current bull market, where we're connecting the tops here from March 24, then here December 24. And of course, to get back up there, we need to reach one of these key areas here in the $130,000 to $135,000 area. And potentially if it takes a bit longer, then we can get all the way up to $150,000. And if you look at the range of $150,000, you can see that of course that's the 1272 Fibonacci extension level, where we took the last swing here from the bottom to the top and back to the bottom. And if we look at the date at the bottom, we can see that if we reach that confluence area here of the trend line and the Fib extension level simultaneously, that would then have to happen sometime between November and December. And of course a very likely area for Bitcoin to find its top in its cycle, as it happened back in 2017 and also back in 2021. Right guys, while we're on the weekly chart, I'll just head over to the total market cap charts here as well. Total one, of course, we can see that we've broken the prior highs. We're consolidating on top of the highs. That is, of course, because the chart is heavily influenced by Bitcoin. As we know, Bitcoin dominance is currently still just below 60%. So 60% of this total market cap chart here is represented by Bitcoin, and therefore the price looks very similar to it. We see that we have here the 8-year resistance line as well, and we're consolidating above the prior high. So this trend looks very solid here and looks as if it's continuing upwards here. Though of course the key area to hold here is the green line here that we have previously broken here and now sitting on top of, right at $3.6 trillion. If we drop down below there, then we can see here that there's strong support in the area just below there, $3.4 trillion, but then here very, very solid level to hold in the $3 trillion area, where we then would come back down to the cycle tops from November 2021. And then here also the 50-week SMA in alignment here, of course, with a key horizontal level coming from those 21 highs. So very, very strong area here. If we break down from there and then to the top, of course, on a closing basis, we want to get back above $3.95 trillion. That would then give us green light, basically, that we're continuing upwards here to new all-time highs with the crypto market cap, total crypto market cap. And then here, of course, potentially that 8-year resistance line comes back into play. And then we could see the total market cap rise towards $5 trillion. Now on to the next one. This total 2 chart here, of course, includes Ethereum but excludes Bitcoin. That is also represented by the price action here. We can see that we are still right in line with the 2021 cycle tops. Of course, Ethereum throughout this cycle has been basically a sleeping giant until recently, and now woken up finally and printed new all-time highs as well. And yeah, this looks very similar here as the Ethereum chart. Of course, Ethereum a big part of this chart here as we exclude Bitcoin, and therefore Ethereum is of course the asset with the second largest market cap, therefore this heavily influenced by it. And here is the key, is that of course we get back above this key line here, now slightly higher here. We printed a new higher high here on a closing basis, right around $165 trillion here. That's the magical line to cross here for Ethereum, then also continue upwards in this trend. Of course, we still expect much higher price targets for Bitcoin and for Ethereum as long as the broader overall bull market trend is still intact. That we've seen, of course, in the Bitcoin chart is very, very solid still. And until we reach that key area of $98,000 and then potentially close below the 50-week SMA there's no real danger that it's over yet. And yeah, guys, since I started posting my videos again in January, we actually spoke about it. that if we don't continue up with the trend back then, where we had the top end of $109,000, then ended up going down towards $74,000. And in the area of $90K or $95,000, I was telling you that if we don't hold that range and continue with that trend to new highs immediately, then that it's very likely that we see a top potentially in Q4 of 2025 or potentially even Q1 2026. Of course, statistically and from historic events and historic cycles, it's more likely that we see it in the end of this year. But of course, the dynamics have changed a lot with institutional money coming in to the market that we just haven't seen back in those previous cycles. And now we're still waiting for the retail to really jump on board here to kick off alt season and all that. And when that takes place, of course, we can expect much higher price target for the top players in the market, but then also the micro caps to really start kicking off. Right, guys, so here the key line, let me just move it up there, is right at $165 trillion. We want to see the total 2 market cap above there to have a chance here then to continue upwards to really high targets here, close to the $3 trillion range. So that of course would be massive. The total 2 market cap then would almost double, and that of course could mean that Ethereum could get up to price targets. A lot of people are saying, including me, that $7,000 to $9,000 for Ethereum at the end of the cycle is very, very likely a very strong potential target, and even still conservative. We will look in the future at some Fibonacci extension levels and also some data that could indicate that Ethereum goes higher than that, potentially towards targets of $12,000. So keep your eyes out for that in the coming days. And the next week, potentially, I'll get into more detail with Ethereum and also all the other altcoins that you can see here: XRP, Solana, Sui, and Hyperliquid. Right, guys, now let's wrap it up over on the total 3 chart before we then head back over to Bitcoin and look at the daily chart there to see the exact key levels that we need to look out for today. Here the same thing still, basically. We're still below our prior high here, although the total 3 market cap has already printed new all-time highs here since the 2021 cycle. This is still the key line here to break, right at $1.13 trillion. And then we can see here that we're in this massive rising wedge or ascending channel, whatever you want to look at it as. It's up to you. And there we have a very similar thing then, and we can look at the range up here somewhere in the 2 or just below the $2 trillion range, $1.8 trillion for the total 3 market cap, which is of course everything excluding Ethereum and Bitcoin. And there you can see here, for example, that the total 2 market cap is $1.56 trillion here on the right hand side. And that of course means that if the total 3 market cap is just $1 trillion, that 1/3 of the total 2 market cap is represented by Ethereum, because it doesn't include Bitcoin. And that's why this looks so similar to the Ethereum chart. And then of course almost 60% of the entire crypto market cap is represented by Bitcoin. Therefore the chart looks very similar to the Bitcoin chart. And total 3 excludes Bitcoin and Ethereum. And there we see then of course that currently Ethereum has been pumping heavy, while a lot of the smaller altcoins have basically just been struggling to beat the previous all-time highs and been moving sideways. There have been some exceptions like Hyperliquid, which also printed a new all-time high. But in general, we still have room here towards $1.13 trillion on a weekly closing basis. If that breaks, then of course we will see the entire altcoin market go absolutely crazy and alt season really kick in. And yesterday I spoke about Bitcoin dominance. That of course has a lot to do with it as well. So if you didn't catch yesterday's video, make sure to check that out. Now a quick look at Bitcoin, and then tomorrow we'll get into the CME chart and Bitcoin of course, and then also ETH BTC to see what's going on over there. Right, guys, nothing changed since yesterday. Obviously here for the daily chart, we see this exact same thing. We see where the pivot points are here to the upside, 112,600. That's the key range that we want to reclaim. Also the previous high here in this downtrend that we're still struggling to break here for a horizontal breakout, which of course is confluential here with the 50 EMA and the 21 EMA. So we want to get above that area here between $112,600 and $113,000, confirm back above there. Then we have a clear breakout here from a horizontal perspective as well. From a diagonal perspective, you can look at it here as a breakout and a retest basically. We can see here we have the trend line. Of course, it's not drawn perfectly now. We came back down to it and we're now trying to hold the retest here. And to confirm that, then of course we want to get back above that pivotal line here, $112,600, confirm above there. And then very likely that we test the previous highs here, or at least the area. First of all, strong resistance coming in right at $117,000. Then here at $122,000, and above there, very clear that we're continuing upwards towards new highs, potentially testing the $130,000 region, where we then once again meet that 8-year resistance. To the downside, we want to hold the current low here, $108,300. Anything below there will then take us back down here to the strong area here where we find strong confluence from a horizontal perspective with this key level here, then the 38.2 on the Fibonacci retracement for this uptrend here, and then also the 200-day SMA here, or 200-day EMA, sorry, right in the $104,000 to $105,000 range. And then that is of course key. If we don't find a bounce there, then it's very likely that we come down there to that key area of $98,000, which is of course critical for the entire bull market. Right guys, and now actually I wanted to do it at the beginning of the video. I almost forgot we need to go into the statistics here. So the key events coming up next week. The first one is the Producer Price Index, the PPI. That is on Wednesday, September 10th, 2:30 p.m. Central European Time or 8:30 a.m. Eastern Time. And what it is, it measures the inflation at the factory level, a leading indicator for consumer prices. And the numbers you should be watching are the previous month-over-month data, which is 0.9%. The expectations are that it drops to 0.6%. And a number higher than 0.6% is a bearish warning sign. And here we have some historic data. So we look at some events where the numbers came out hotter than expected. For example, back in August here, we can see August 13th. The consensus was 0.7%. The numbers came in hotter than expected. And there we see how the price reacted after that hotter reading. 1.1% drop within an hour, 1.8% drop within 4 hours, 24 hours, 2.1%. And then within 72 hours, the Bitcoin price was down by 2.9%. So you can see that these readings really have a strong impact on the price for Bitcoin. Then here, for example, in July, the month before, we had a cooler reading. So we were expecting 0.3%, but it actually dropped to 0.2%. And then you can see the opposite happened. The larger the time window got, the bigger the price movement for Bitcoin, from 0.8 to 1.1 and 1.4, and then 2% up within 72 hours. And yeah, guys, you can track that back here, same as yesterday. Take a screenshot of this chart here, and then you can go through the numbers. And as I said, in the future, in the next couple of weeks, I will start publishing all this data over on bitcoineasy.io. So make sure to head over there as well and sign up to the site. You only need to drop your name and your email address, and then you will have lifetime access to all the features that are available until the premium content starts rolling out. So everything until then, even if it becomes premium content in the future, you will still have access to it for free. Yeah, guys, and just check out the numbers here. Every time basically it came out cooler than expected, the price pumped, and every time it came out hotter than expected, the price dropped. There's almost no exceptions for that. And here we have an historical average. So when the numbers came out hotter, price started on average moving downwards and started increasing over time. When it came cooler, the exact opposite, and in line, basically the price stayed within 1% of the actual price at the time of the release of the numbers. So very, very similar here with CPI, but CPI gives more volatility than PPI. The difference is here we looked at month over month on the PPI. On the other hand, on the consumer price index, the CPI, we pay more attention to the year over year data, because of course consumer spending does not change so much month over month, and this gives us a much clearer picture of what's going on. So here, very similar, we can see the first line here. Numbers came in hotter than expected last month, and then Bitcoin started dropping here. You see within an hour 1.4, within 4 hours 2.1, then 2.5 within a day, and 3.3 within 72 hours. And then here, when they came out cooler than expected, we can see 2.2% within an hour, 3.5, 4.2, and then 5.1 within 3 days. So a very, very strong catalyst for the Bitcoin price when these numbers usually come out. So keep your eyes out for the CPI, which is Thursday, September 11th, 2:30 p.m. Central European Time, 8:30 a.m. Eastern Time. And this is the primary measure of consumer inflation, the most important economic report of the month. And that, of course, you can see by the stronger volatility that's provoked by these events. Then the last one to really focus on next week is the European Central Bank meeting, the equivalent, like I said, to the FOMC in the US, where rates will get decided. And yeah, you can see that the ECB sets monetary policy for the Eurozone, impacting global liquidity and the US dollar. Potential impact: a more dovish or pro-stimulus tone is bullish for crypto, a hawkish anti-inflation tone is bearish. And here you really need to focus on the tone, right? We can see here that we had, for example, the last announcement in July. We saw that the consensus was that the interest rates are being held. The actual outcome was that they're being held, and the tone was neutral. And you can see here also in the price action afterwards, that displayed perfectly with everything that we saw. Then the the months before, the cut, we expected 25 basis points being cut. That's actually what happened as well. The tone was dovish, and therefore the price over time started moving up. But you will see also that the European numbers don't have such a strong impact as the American during the FOMC. But one thing that you really need to focus on both of it is, if the consensus and the actual are one thing and the tone is either dovish or hawkish, the tone has a bigger impact on the price than the actual numbers. So here, for example, we see back in September 14th, 2024, and there we can see that we've been expecting a hike by 25 basis points. That actually happened as well, but the tone was dovish, meaning it was more positive, and therefore, although we had bearish numbers coming out, we saw that the price actually started moving up based on the tone, right? And then, of course, I also have the historical averages for you, where we hold and we have a neutral tone. You can see that the price basically stayed within the same range. If we held, but the tone was dovish or positive, the price started pumping. So there you see again the tone of the announcers of what we can expect for the future has a bigger impact than the actual numbers. And then here we see the same thing again. When we're expecting to hold the rates, and they did hold, but the tone was hawkish, the price then started dropping instead of continuing like with a neutral tone in the same range. And you can see over time the price started dropping more and more. And yeah, guys, take a screenshot of this as well, and there you can see how the tone really dictates the price movement even stronger than the actual outcome. Right, guys, and that's the key data for next week. Next week, we will go through similar data here for the FOMC meeting, which is the week after. And then in the coming week, I will also get into some crypto market warnings based on on-chain and flow data. Right, guys, that's a wrap. I think I have it all covered now. The key charts here to really look at to get an understanding of where Bitcoin and the crypto market is at. Of course, tomorrow I'll get into the CME chart, and we'll also look at closer at Ethereum, Bitcoin, the pairing, and of course the weekly open again, how this weekly candle closed and how it impacted Bitcoin and the crypto market. Right, guys, I hope you enjoy the rest of your Sunday. Once again, thank you for watching. It's really nice to be back after a 3-week break here on YouTube. And yeah, if you're new to the channel and you appreciate the content and you want to see more of my analysis, then make sure to not only smash up that like button, very important, guys. It's a small act for you, it's free, but it really helps me out with the algorithm here. And yeah, guys, to catch all my updates, make sure to subscribe, hit that notification bell. And if you want to suggest anything else that you would like to see here on the channel, potentially some altcoins or some different charts that I haven't mentioned, then make sure to drop it down in the comments. So whatever else you want to talk about, I'm happy to answer all your questions. Right, guys, I'm out of here now. And as always, happy trading and see you soon.